At its February board meeting, the RBA made the decision to lift the cash rate by 25 basis points. As a result, the cash rate now sits at 3.85%. Inflation is too high in the Australian economy. We've had now 6 months of inflation above 3%, and on new RBA's forecast, inflation will remain above 3% for longer. A lot of this has been driven by improvements in the economy. Private demand, particularly the consumer, has picked up. There's very limited spare capacity, and that's driving inflation higher. As a result, the RBA's resolve has been tested, and they've acted to ensure inflation comes back down to its target rate of 2.5%. The RBA are watching the data flow very carefully from here to see the impact of that interest rate hike on the Australian economy. They want to see inflation cool. They'll be watching upcoming data on prices in the Australian economy to judge how the economy is reacting to higher interest rates. They'll also be looking at data on the labour market, on spending, on home prices and credit growth, just to see if further interest rate action is needed to bring inflation back down to target. We are now expecting another interest rate hike in May. The RBA's resolve to bring inflation back down has lifted, and given the improvements in the economy we've seen in recent months, we feel it will now take another interest rate hike to bring inflation back down to target. The labour market is in a really good position, and this is another reason why we now see another interest rate hike in the Australian economy.